All right, folks, I want to bring your attention in something really, really important. And unfortunately, this is something that a lot of people within the retail investor community in AMC are not really paying attention to or are not understanding properly. And it may cause, some emotions to start riling. And, so I'm going to address something really important here. So the thing is, markets for the last 5 days, 4 to 5 days, have been really, really, really red. I mean, so red that at some point, people are now talking about, correction territory, meaning we are in for maybe another 5 to 10% in addition to the already 10 or 11% we were since the beginning of this year. Whether you want to believe it or no, AMC is part of a stock. I mean, the stock market. And because AMC is part of the stock market, it will have to behave according to the market mechanics. If you really paid attention a little bit, and I know you have, well, for the last 5 days, it was really difficult not to see AMC follow the market. Meaning, anytime the market will be down, AMC will be down by a decent amount of percentage, like 3 to 4%, even 7%. Yesterday was down 7 to 8%. When the market is up like it was last week, even if market were not as big up green big time, AMC will close 8%, 5%, 4%, 2%, or just barely flat. Now, it's precisely because AMC is part of the Russell 2000. And this index, whenever markets are unstable, like it has been the case since this whole Russia thing started, it will be the index that will be the most hurt. Why? Because it's composed of what we call small companies. Because small companies are those companies that are you don't even aware those companies exist and are trading in the stock market. And because they are small, there is not enough volume trading on these stocks and on the Russell 2000 as a result. Because I mean, in comparison to the big caps, the Teslas, the Amazons, the Walmart, the Home Depot, etc., etc. So that's just the nature of the structure when it comes to AMC trading within that specific index. Now, another thing to consider. Well, markets barely kept their gains as the market started this morning. I mean, more trouble for a troubled market, more trouble for a troubled market because of Russia tensions with Ukraine. It's causing a lot of fear, uncertainty, and doubt. Global markets rebound before the session started this morning and yesterday after hours, but I mean, everything was just wiped out as the beginning of the trading session because there is a lot of uncertainty. People don't know if Russia is going to do what it's supposed to do, but more importantly, if that happens, then what we are already focusing on, which is inflation, could be worse. Why? Because of the energy price going even higher. If that goes higher, because energy is part of the CPI calculation, then you can expect inflation to continue to go higher, and that's not good for current investors, even though they're already priced in what the Federal Reserve is going to do. So what we need to keep in mind, which is kind of a positive thing for the market as a whole, and AMC, since it's been following the market lately, is the fact that, well, when the market are pulling back so high as has been the case. I mean, just look at the Dow Jones here. The Dow Jones is losing 435 points as I'm talking, recording this video. But if you look at the last month, all right, for the last month, that's 3.5%. 3.5%, it's a lot. If you take the last, since February 9, and now we are February, since the beginning of this month, this is 7.2%. This is a lot. So when people are pulling money back, pulling money away from the market, that money is sitting on the sideline because they don't know exactly what is going to happen, especially with inflation and Russia. All right. Now, the thing is, when everything ceases and when everything settles down, because personally, I don't expect Russia and, Ukraine tension to be something that will be dragging for the entire semester, for the next 6 months, or even for the next 3 months. I may be wrong, but what I'm saying is when you look at what is behind this conflict, it's not the number one fear, the number one risk that the market, especially here in the US, considers. it is still inflation. So why people are still, putting all the attention on Ukraine versus Russia, it is what I will call an overreaction, because we have to keep continuing to put attention into inflation, and the market kind of already adjusted towards what the Federal Reserve will do about that. So when this rebounds, you could expect then AMC to also continue to follow this trend, especially as we have a lot more institutions and suits buying the stock, like, the biggest pension fund in the United States. All right. So just to say that, well, this pullback that we've been seeing for the last 5 days, we were at 20 almost, and now we are at 60, below 16. I wouldn't be really worried a lot about it, just because of, the current market structure that I just, laid down for you guys. So let's just see how this unfolds. It's going to continue to go down indefinitely, but at some point it will have to rebound. And when that happens, the money sitting on the sidelines, they will looking at something that will give them the ability to make a lot of return on the shortest amount of time. And we know AMC, it's best for that. The 20% that we lost so far since Monday, we can get those in a single trading session. That's just how powerful, and volatile this stock is. And anybody willing to make money in this tough environment definitely will look at this, because it's pretty cheap.